Dennis, I just want to pick it up on your view of oil going long, or that you think oil price is going to be higher longer term out. Why is that?
First of all, what I mentioned in the last segment is watch the term structure. Watch how the front month trades against the deferred months. In a good bull market, the front month should gain on up days and should gain even on days when the market goes lower. The market should go to a backwardation, as it's called. And we actually went to a contango over the course of the past month and a half, which had me being bearish of crude oil. But in the past 3 or 4 or 5 days, we've watched the backwardation, we watched the contango disappear and the market go back to a modest but important backwardation. The front months are gaining on the deferreds, and I think that's important. The predicate for higher prices is China, no question about it. China's coming out of its shutdown given COVID. I think this is an important circumstance, and that's going to be the driving force. Plus the fact that the OPEC nations all seem willing to, or rather I should say unwilling to increase production and willing to decrease production on almost a steady basis. So I think that China and OPEC, 6 months from now, a year from now, 2 years from now, crude oil prices are demonstrably higher. A week from now, crude oil may be slightly lower. But the driving force is watch the term structure. It is the best leading indicator of where crude oil prices are going to go. And in the course of the past week and a half or so, the term structure has quietly, and I think importantly, turned bullish.
And just to pick it up, do you also believe, though, in Goldman's call, and also we invest with Rafi Tamazian, and he's had this call for a number of years, but there's been such supply constraints around the world from various companies, governments, et cetera. Is that not a key driver as well in your mind?
Oh, no question. We're doing stupid things here in the United States, trying our best to slow down the finding of and the drilling for and the refining of crude oil. I think our government has done a dastardly job. The way we've treated Canada has been utterly disrespectful, and I think patently stupid on our part. That'll change over time, but we shall see. So we're increasing production, but we could increase production here in the United States to 13 or 14 million barrels per day, and we don't seem to want to be able to do that. It's I think patently stupid, patently illogical, and patently wrong.
Okay. I want to get your take as well. If we're looking at equity prices going lower, what's a great way from an investment perspective to express that? And I know that you can short an index. Can you talk to us a little bit about how you go about doing that as a hedge?
The swiftest and easiest way is to be short the S&P future, but most people don't like to trade futures. I understand that. And there are ETFs predicated upon declining prices of equities prices. SDS is a double, as it's called. It does twice the beta of the daily action of the market. SDS is one way to do it. I forget the name of the 1-to-1 rate ETF, but there are ETFs that give you exposure to the downside. SDS is the one that I use more often than not. It seems to function very well. There's good liquidity. You can do any size that you want, 1,000 lots, 10,000 lots, 10,000 shares without moving the market. I think that's the place to go. So the S&P futures are the quickest and easiest way, but most people don't like to trade futures. So I understand that.
Yeah, myself as well. But my only concern about doing like a double short ETF of sorts, SDS, as you mentioned, is there's the inherent decay in it, isn't there?
Yeah,
am I wrong?
There is. There's inherent decay. If the S&P goes sideways and you own SDS, you're going to lose a couple cents each day. So that's the problem. You have to be very right in order to make it work. But when you are right, it works. But you're right about the decay. That's something to be concerned about. Very good. Thank you for bringing that up.
Okay. Well, only because I've wanted to do this and I haven't done it because, to your point, I don't want to trade futures. But Dennis, before we get to your rules of trading, which I really want to get to for investors today, a couple of stocks that you do like. You are owning a couple of stocks. Which ones are they?
The only ones that I own Altria, ticker symbol MO, because it's got a well-covered dividend and it seems to have formed a nice bottom. I like the fact that it doesn't make new lows. It goes up on better volume. And I own a bit of Verizon, basically predicated upon the fact that it also pays a well-covered dividend. And today it's breaking out to the upside, even on a day when the market is down substantively. Verizon's trading higher, which is impressive. So I may buy some more before the close.
Okay. Let's get to a couple of your rules of trading. What's number one on the list?
Number one it's always number one. Never add to a losing trade. If you buy a stock at 15 and it goes to 10, you're wrong. The market's telling you, why should you do something that's wrong? If you buy a stock at 15 and it goes to, you're right. The market's telling you that you're right. And the only thing that, because your equity, value of your account has gone up in size. So always buy more of that which is going up, do more of that which is working, try to do less of that which is not. That's a good rule in life, and it's a great rule in trading. That's rule
Okay.
number one.